Good morning, and holy shit, what a market this has been this week, guys. So I'm exhausted. I was in bed around 8 o'clock last night thinking I'm gonna get myself a good night of sleep. My brother texts me, lets me know that Iran punched back. The market was getting ugly, so I was up all night watching this shit, and we're in a crazy market right now, guys. We are finding ourselves in a very, very interesting market environment. So to give you guys who live under a rock a bit of a recap here, Iran responds last night. They launched several ballistic missiles towards Iraq air bases that house U.S. soldiers, and initially we get the reaction that you would expect. Iran punches back, they retaliate. We closed yesterday, guys, at 322.73 for the S&P 500. We dropped as far as almost 317 last night. So the news comes out, and initially, while we're waiting to see casualties, while we're waiting to see whether the U.S. responds, whether Trump has anything to say, the market begins to dump. So we take a look at the after-hours price action here for the S&P 500. Nasty, nasty dump initially. And you guys can go look at basically any stock that might be on your watch list this morning, like an Apple, which dumped really hard, like an Amazon, which backed it up like a dump truck and dumped it hard. So everything, guys, last night, the indexes, the leading names, you name it, everything is giving us the initial reaction we would expect, which is Iran hasn't retaliated. The market is now on its heels waiting for the U.S. response, once again, fearful of war. Here is what is crazy, though. Right, and this tells us a lot about our market as of right now. Knock on wood, but as of right now, this is a very tough bull market to kill, regardless of the news and regardless of any retaliations. So we get hit with that news last night. We get the response initially that you would expect from the market. Here's what's crazy. It's about 7:30 right now. The market opens in 2 hours. As of right now, we are set to open higher than we closed yesterday. We get retaliation from Iran. They launch a number of ballistic missiles. That was a pretty shitty attack. Some of them blew up in midair. A lot of them missed their targets, but nonetheless, they retaliated. Some of their missiles did hit as of right now. I don't think there was any casualties as far as U.S. soldiers go. I'm not even sure if there's any casualty as far as Iraqi soldiers go. All these details are coming out as we speak. But nonetheless, guys, we get the news that they have retaliated. The market initially dumps, and then it just rallies right back to the upside, and we are higher than we closed yesterday. So to me, as somebody who lives and breathes the stock market, who trades this thing every day, this is a crazy reaction. It's not often that the market in the after hours dumps as hard as it did, and never mind bounces, but literally brings us to the open higher than where we were from the previous day's close. So crazy shit, guys. And if you remember from the video the other day when we first started getting all this turmoil with Iran, the thing that I told you guys to focus on here was the volatility index, right? You can take trades based upon CNBC, based upon Twitter, but that's bullshit. If you begin to buy into everything the media is trying to sell you, you're losing touch with the game itself. What we got to focus on, guys, and remember, guys, I'm coming to you in these videos from the perspective of a trader. I think there was a little bit of confusion on my prior video. Some of the comments didn't really seem like the individuals understood I was a trader. So we're not buy and holders, we're not investors, we're not political group. This is all about trading the market. So as traders, guys, when we've got negative headlines such as what we're dealing with right now, the number one thing to focus on for us is the volatility index, VIX. If you're in the Focus Trades group, you're very familiar with how we can use VIX as a gauge of the market. But in plain English, guys, when VIX is above 16, ripping and spiking above 16, it ain't good for the market. It means that we have a big presence of fear in the market, and that is usually when VIX is above 16, when things are going to get very sloppy, very ugly, and very weak. When VIX is below 16, the market tends to be just fine. When VIX is below 16, that is kind of the green light for the market to make its natural progression to the upside. So, in the face of news like this, we can look at the volatility index, and we can use that as our gauge for whether or not big money is really giving a shit about what's going on or not. Right? If we look at, boom, if we go here, guys, and we look at last Friday when some of this Iran news initially came out, of course the volatility index spiked, but it quickly dropped back to the safe zone. That gave the market to make a pretty epic bounce there on Friday. Same thing took place on Monday morning. Right? Volatility is knocking on the door, heading to the open. As soon as the market opens, VIX right back into the safe zone, once again, the market makes a beautiful bounce to the upside. So here's what volatility is looking like 2 hours before the open after Iran has responded. We got a spike that you would expect, but once again, fading right back to the downside. So as of right now, a few hours before the open, what does this all mean to me as a trader? So I take this, guys, as a sign that there's no panic right now. There's no fear and there's no sense of the big money that controls this game trying to run to the exits. If we had this news, if we had this retaliation and the volatility index was above 16, holding above 16 and ripping even higher, that would give me the indication that probably time to be a bit careful. Definitely don't want to be holding long positions overnight. That would be my indication that big money is fearful and they're trying to get the fuck out of the market. We ain't seeing that right now. So as traders, guys, who focus on the things that matter most, volatility, price action, supply and demand, the market really ain't caring right now. As crazy as that might sound to somebody on the outside, as a trader, these are the things we focus on. The market isn't caring right now. So keep in mind, guys, this could change minute to minute. This could change any given moment now. But as we live through this current environment, going day to day with things, which is my suggestion, continue to focus on that volatility index. Just like Friday, like Monday, and like after hours last night, anytime that we get an aggressive drop to the downside based upon some negative news, that's the first thing you want to go look at is that volatility index. If it's not spiking above 16, and even better, like it is this morning, fading right back to where it belongs in that $14 range, that is usually a green light for the market to be able to make a bounce to the upside. It's exactly what we saw last night. So me, personally, I'm a bit surprised that the market has bounced this well. I'm surprised that volatility is fading as hard as it is into the open. And as I mentioned, this could change any day, guys, but right now, you as a trader, if you're watching this video, I'm assuming you're a trader, don't get caught up in the headlines. We as small traders, literally, if we got a chance of making money, if we got any chance at all, we've got to be like little magnets, just simply following the big money. We can short the fuck out of the market when the big money starts to, when VIX is above 16 and we see clear as day big money running for the exits. But until that happens, guys, we got to play what the market has given us, and what it has given us 3 times in a row here. We hit on 2 of them. This bounce took place pre-market. What we've had here 3 times in a row is a market that drops on negative news. Volatility quickly drops back to where it belongs, giving the market a green light to make a pretty good bounce to the upside. We caught that Friday, we caught that Monday, and the same exact move is happening here into the open. So I don't have trade suggestions for you guys today. My suggestion is to be patient and take this day to day, but as we continue to get new headlines, potentially more retaliation coming our way, this is how I would look at the market as a trader. Ignore CNBC, ignore the headlines, get as close and in tune to big money as you can. And the volatility index, guys, is a great tool for kind of gauging where the big money is at mentally. Are they ready to get the fuck out of the market, or are they taking these drops, regardless of the news or the meaning behind the drop, as opportunities to accumulate more long positions? 3 times in a row here, that's been the case. We'll see what today brings. I wish you guys the best of luck. Be safe out there. Focus Trades members will be live at 8:30, so I'll see you guys soon.